you have to have this strategy of how you're going to go to market, how you're going to monetize this. And I guess the focus that we're recently putting forward around fabrication capacity, project delivery capacity, operating capacity, these all point to sort of milestones around taking technology out of the development phase and getting it into implementation and therefore revenue generation. In this sort of forum, I can't go into too many of those details, but I think as more of those plans sort of in coming weeks and months become clearer, I'm quite confident that'll give the market some confidence around our ability to actually execute our plan.
Welcome, Bahay, to this kind of year-end interview with GOLDINVEST. I think we should take the occasion to look back to what has been achieved over the course of 2023, and ideally, of course, you give us the outlook of what lies ahead in the coming year. And if you allow, my assumption is this coming year, it's really a lot of things come to fruition that were prepared until now. That's what I'd like to discuss with you.
Yeah, no, thanks, Sven. Great to be with you again. I think a key point I'd like to make is that the way you described a lot of things coming together is exactly the case. So a lot of the foundations we've built in terms of developing technology, validating technology, the engineering that sits behind it are all coming together. And in particular, we're building a capability now to be able to deliver those technologies. And hopefully during the course of the conversation, I can provide a little bit of detail around what that looks like, which is, quite an exciting stage of the company's journey.
Well, I think it's maybe helpful to remind everyone that there's maybe two parts in the company. There's the foundational part, which is the services geared towards, let's say, the mining industry. That's the day-to-day business you have, which is, I think, worth pointing out. It's not the usual thing you would expect from a startup. And then there's this, let's say, hockey stick potential transformational technology that obviously everyone is really eager now to see getting implemented, maybe with even some big names out there.
Well, I'm happy to provide maybe just a quick snapshot perhaps of the two parts of our business. So thanks for bringing that up, Sven. So we have what we call the conventional water treatment part of our business. So during the ordinary course of business, we have a team of people who design and install and deliver water treatment related infrastructure. So membranes, filters, pumps. And you're right, that has a strong focus or emphasis on the mining, energy, sort of real industrial sectors. And the reason we build that business, it gives us capabilities and helps us sharpen our skills and helps get us, match ready for delivering our technology part of our business. So that was the conventional water treatment. Then there's the technology-based water treatment part of our business. And that's really, in our harder parts, really where our core focus is, where we see a lot of upside to our business case. But nonetheless, that conventional water treatment business generates roughly $5 million a year of revenue, has quite a significant sort of growth rate. So year in, year out, we expect that business to compound quite significantly. And as we get to the sort of the more advanced stages of the conversation, I'll provide a little bit more visibility on what that looks like. But you're right, that's a foundational conventional water treatment business, and we're building off those foundations and using that expertise to be able to roll out our technology based portfolio moving forward.
Yeah, and if I recall correctly, you are just about to basically refurbish a new kind of place where you actually are getting ready to actually build let's say treatment plants yourself with the existing team, with the existing know-how.
Yeah, look, that's right. I mean, we have some existing capabilities. So we have built water treatment plants before, where we've designed them in-house, and we have a services business in WA, a fabrication business in the Northern Territory, and our engineering team is based in Melbourne. So we do have capabilities already, and we've successfully utilised those capabilities to deliver some plants. But as we move forward, we realise we've really got to take that up a step up in our capabilities. We need to be able to deliver bigger, more complex plans, and part of the recent capital raising, of course, will enable us to do that. And I'm sure we'll get to it during the course of the discussion, but a big change in the flavour that I've tried to insert into the annual general meeting presentation, this emphasis on project delivery. So we don't need to deliver any of those technology-based plans today, but we have visibility now moving forward on a number of significant opportunities. They will reach a number of commercial milestones. Some of these projects are at scoping, some are at feasibility, some are further down the road. So now what we're looking to do is, anticipating that we'll need to be able to deliver those projects, we're looking at building more of those capabilities at the moment. So as part of those plans, yes, we're refurbishing a testing and fabrication facility in Melbourne. That's an important step up in our capabilities. But we're also looking at a few other opportunities that enable us to accelerate that process. So whilst we have existing capabilities, we're growing those capabilities, there are other ways, other pathways that we can acquire some of those capabilities as well. We can partner with companies who deliver these sorts of plants. We can acquire companies that deliver these sorts of plants, any number of options. And I guess that's a process that's quite advanced, and we're looking forward to being able to share a few more details with the market in sort of coming weeks and months on that strategy.
Yeah. Well, let's maybe switch gears then towards the technology side of the company, and obviously as a shareholder, as shareholders, their key question is, when is it actually going to play out? Are we going to see the first plant being installed in 2024? Yes, and when?
Yeah, that's a pretty direct question. There's a scale of projects that, let's call them $50 or $100 million plus. So they're large, complex chemical plants, which we can provide the technology for, but they're of a scale that are not suitable for us to deliver. So that scale of plant, we're working with Worley, of course, for those who don't know, a global engineering company, and they have that capacity. So there's a project that's quite advanced, it has undergone feasibility and pre-feed type activities that we can touch on in a moment. So that's quite an advanced process. And in addition to those very large scale projects, we also have a smaller scale of projects in a range of sectors. One of them is, of course, in the coal seam gas sector that you're alluding to. But you may have noticed in the AGM presentation, of a scale of $3, $5, $10, $20 million, a scale of project that Parkway could execute, there are a number of other applications as well, in addition to coal seam gas. So we alluded to a number of mining applications, acid mine drainage, and then some downstream applications within a battery precursor. So these are significant opportunities as well. But to come back to your specific question on within that segment of technology part of our business, within coal seam gas, within upstream, there's a number of opportunities we're exploring at the moment. Some of those have undergone piloting, and what we're trying to do at the moment is really work, given it's likely that we will hopefully own and operate these plants, what we're really doing at the moment is trying to understand what does that look like in terms of the capital costs, our ability to deliver these projects, the sorts of operating profile. If we're going to operate these projects, you need to be purchasing a number of megawatts of electricity on a multi-year sort of period. And as part of some of those discussions, you would have seen, for example, we recently entered into an MOU to be able to procure renewable energy in Queensland. So there's a whole range of those projects consist of more than simply agreeing to sell somebody a water treatment plant. They involve 5, 10, 20 year take or pay type contract. You need to have offtake agreements for your product. You need to have toll treatment agreements. So obviously very, very commercially complex. Having said that, in the meantime, part of these capabilities we spoke about, having, you know, internal large-scale piloting, internal upstream fabrication, project delivery capabilities. What we're doing in parallel is, some of this is like a chicken and egg type scenario. You know, in order to be able to get to a point that you can convince a client to award you a contract to treat their waste for, you know, a decade plus, you need to be able to have the capabilities. And similarly, in order to develop the capabilities, you need to have confidence that the market exists, that there's enough appetite for these sorts of projects. And I guess we're at the stage now where we feel sufficiently confident. We've done some very, very detailed work. We're having some very exciting conversations with some of those upstream players around what that challenge looks like, and, you know, the sorts of models they'd be willing to enter into in order to deliver a solution. And what we're doing is putting ourselves in a position as a company to be able to match our capabilities with those market opportunities. And I guess without, you know, I've got to be careful not to provide guidance around particular sort of outcomes spent, but I'll just provide a generic anecdote from a recent discussion we had with one of those upstream players. So this is a major coal seam gas to LNG company. All the low-hanging fruit to treat their waste brine or wastewater they've already adopted. So they've gotten to the point where the brine and salt that they're left with, they have nothing else to do. So we have ongoing discussions, great relationship with them. We're having a range of sort of discussions, and we're discussing sort of commercial models. From their perspective, this is a waste stream, they're a gas company, this is non-core, and they realise it's a significant liability. Can't we just pay you guys to make that problem go away? That's the tone of the discussion. And they do this in other parts of their business. You know, we have some insights of how they, you know, pay to deal with other problems. That's just, you know, the way they work, stick to their core business. And I guess from our perspective, we have sufficient confidence that these are large problems, complex problems, expensive problems. There's a lot of social license related challenges at the moment. So I'm not sure, not necessarily around COP28 and ending fossil fuels or anything like that, but there's some land subsidence where the ground sort of collapses, where some of the groundwater has been removed. We don't have a solution for it, and it's unrelated to what we do. But there's a little bit of anxiety between, you know, these gas companies are extracting the gas and they're damaging, you know, the environment. And we don't express an opinion, you know, we're a neutral party in that discussion. But I think it'd go a long way if these gas companies demonstrated a commitment to be able to, you know, come up with a long-term permanent solution. It would generate a lot of goodwill, and, you know, we're not relying on the goodwill to build our business, of course, but being able to be on, you know, I think the right side of these transactions, I think is a timely advantage, particularly as these companies, you know, in some respects have a little bit of an existential crisis, you know, future of fossil fuels, legacy of their operations. And from our perspective, we just want to be part of the solution. And to go back to the original question, we're doing everything we can at the moment to put ourselves in a position where a client can send us large-scale sample. We can run that through our pilot plant in, you know, over the course of a couple of months. All the techno-economics we already understand, how to deliver the project, the sort of equipment that we would require to deliver the project. We already have commercial arrangements to put ourselves in a position that, you know, within 12 months we can be, you know, entering into a next year during the course of 2024, we can enter into a commercial arrangement to deliver one of these solutions. Now, of course, we're not going to spend $10 million building a containerized plant, half a dozen containers ready to deploy just in case somebody wants one, of course. We'll align or schedule our capabilities and our build out with, you know, what we think the market opportunity is. But in general, we're very optimistic, and hence why we're investing in those capabilities.
So my takeaway is there's the gas companies are prepared. They have even a sense of kind of urgency to get the problem solved, and in relative terms, you know, the amounts we are talking are really small amounts for these major companies. They are significant for Parkway, I think you mentioned kind of $5 million earnings per plant, something like that. That is not even, that doesn't move the needle for those big companies. They have more to lose on the reputational side and how they run their business. So I'm assuming they are now educated about this new process. They seem to embrace it. And on your side, Parkway on its side now needs to basically get ready, not only technically, as you said, building the capabilities, but also commercially, putting all the contracts in place and everything. So that is it fair to assume that that is currently already happening?
Yeah, most definitely, Sven. That's very much the focus. Put ourselves in a position that we can scale up, design, build, execute. So there's some core capabilities, things that will happen regardless in-house. And then there's some additional opportunities that we're looking on that, may be a faster, provide us with an opportunity to leapfrog some of our capabilities. And there are some additional capabilities that it mightn't make sense for us to be able to develop internally. We just have to align ourselves with a contractor who does their specific scope. And I don't want to sort of narrow that down specifically, but that's some very detailed project. Normally when you get to this sort of stage, you are completing a feasibility study, you enter into what's called a PEP, a project execution plan, and part of that outlines, how a project's going to be delivered. So we, have a team of experienced engineers. So there's a lot of planning work that goes into in order to execute these projects, what sort of capabilities, what sort of partnerships, what sort of commercial models. And on top of all that, there's also a financing angle, of course. These upstream plans, we would hope to be the owner ourselves, and so some of the discussions involve, we're conscious that as a small company we have to be able to finance these. So the sorts of discussions, that we're exploring are around, prepayments around some of these things. So the sorts of numbers we've published, Sven, were roughly for a single module, and some sites may need multiple, but might be say $10 or $15 million in revenue, maybe 5, 6, 7 million. A year plus in sort of a operating margin for Parkway. So from our perspective, given the alternative is going to cost the client many hundreds of millions of dollars, prepaying somebody like us who's delivering a turnkey solution, has trialed thousands of litres for hundreds of hours on their specific brine, has a very high level of confidence, requesting some sort of 2-year prepayment conditional on certain milestones and installation on site is not something that we get a lot of pushback on. And from our perspective, if we were to get a year or two of prepayments, and of course we'll have to make some concessions, of course, maybe some discounts around tolling fees,
yes,
but that would fund these projects immediately without us having to put up any working capital, and we get paid for the feasibility studies anyway. So it's not actually a particularly capital intensive, and that's just one example of how we might finance an upstream plan. There's many other arrangements, but we've had some interest from sort of third parties, but we're sort of reluctant to get into debt type instruments or try and leverage these things, particularly for the first couple. I think commissioning can take longer, or you have some challenges on product quality. These are normal first of a kind sort of ramp up issues that we're very keen to not bet the company on the first project, for instance. Not a sign of our lack of confidence, but it's more just trying to be conservative with how we manage our business.
Yeah, well, the kind of questions that I'm getting, and you will get as well, I guess, sometimes is, it's all nice and good, but is there still technology risk in terms of upscaling? That's usually one of the biggest hurdles for companies. As far as I'm hearing you don't see that as much as a risk.
Yeah, no, for sure. So I guess there's two elements to the risk component. One is the process technology related risks, and the second one I think you just touched on relates to broader project risks. So a small company delivering a first of a kind project around budget, timeline, equipment, commercial arrangements. So those I won't speak to, because we've done a lot of work on putting ourselves in a position where we can try and mitigate some of those risks. For those technology-based risks, it was almost a year ago, on the 23rd of December, we outlined some large-scale, sort of 1,000-litre plus samples being treated, rapidly scaled up from bench scale work that was sort of 3, 5, 10, 20-litre samples, and we scaled up to 1,000 litre, sort of 50x. And I've been in sort of technology commercialization a long time. It's quite unusual to scale up up by a 50 factor in one go, particularly for a complex process. And within 2 weeks of scaling up, we came out with third-party data immediately before the end of the year, sort of demonstrating that the technology works, the energy consumption, reagent consumption, recovery factors. There's a whole bunch of metrics that sort of point to the efficiency of the process, the scalability of the process. And I guess from our perspective, the data we generated, even at that stage, gave us an enormous level of confidence that we can go from, experimental stage to bench scale to, sort of pilot scale. And what was interesting is the pilot scale data was actually more robust. You're working with larger scale equipment than what we achieved during the bench scale. So that gave us an immense level of confidence. And that was a year ago. And in the last year, we have continuously, we haven't announced our R&D spend, but it's plus $1 million sort of, that's cash expenditure. And for every dollar we spend, we get sort of $2, $3, $4 in leverage from R&D partners, from the government, a range of sources. So this is $40,000, $50,000 a week in R&D related activities. Every week for a year, we've been investing in sharpening these technologies. So, that's not work that we just put out in a quarterly result, or we announced, we found a better membrane or anything. But that's work that, as a technology company, that we're 100% committed to. And keep in mind, the company that we have to convince the most is ourselves. If we're going to be building and owning this plant, and we're going to be operating this for a 5 or 10 year take or pay contract, we want to be absolutely certain that the performance guarantees and the operating performance is absolutely achievable. And I'm often finding myself sort of pulling up our engineering team, so what's this additional 10% margin of safety? There's, a lot of internal, sort of buffers put in place to ensure, the process works. There's no doubt the process works. The next question is, can it be scaled up? Initial indications are yes. All the equipment we're working with, each of the unit operations, all uses standard commercially available equipment, so there's no specific concerns relating to that. And then normally the big risk at this sort of stage is, can you go from something that works in a batch mode to something that works in a continuous operation? And that's not really a process technology challenge, that's more an engineering challenge. Can you design this tank to empty into that, in a manner that's scalable in an industrial operation? But we have smart people on the team, and we work with lots of smart people to be able to solve those problems. So from where we're sitting, we don't see that as a first order risk by any stretch of the imagination. Of course, there will always be risks until we get to the point where we have a multi-million litre per day plant operating successfully. Before where we are in our development cycle, we're feeling very, very confident from the process technology package.
Yep.
To the extent that whilst that work happens in the background, that's why we're developing these additional capabilities to deal with the more operational challenges or project delivery type challenges. Because up until maybe, if I had to sort of make a distinction, up until the end of last year, the key risks really were process technology. Can you really scale this to a point where you feel confident? And that's why we came out with that announcement on the 23rd of December. And we feel like that question's been answered. We're still doing a whole lot of work on it. But this year, or heading into 2024, the key question we need to really answer is, can we deliver a commercial scale plant, internally or with partners? And we didn't just realise this, of course. We've only just outlined at the AGM in terms of the outlook for 2024, but we've been doing a lot of internal views and planning and vendor qualification to put ourselves in a position where we can confidently deliver a project, and also work with end users and clients and demonstrate to them who are our project delivery partners, what's the project execution plan here. Yeah.
Well, to the AGM presentation, there's this one slide that shows basically the expected developments according to the calendar, and the one thing that obviously stuck with me is that there's a final investment decision to be expected somewhere, let's say later in the spring of next year, regarding the realization of one of these upstream plants. Can you detail that a little bit more, maybe?
Yeah, for sure. So there's a critical path we have to go through. So maybe I'll just outline at a high level the stepping stones to go from an initial concept and through to delivering a plan, just high level, just so we understand the milestones. So the first stage is what we have to do is do a proof of concept. So the client might provide us with a sample of brine, and it's a simple bench scale test. Does your process actually do what it's meant to do on our particular brine? So we perform that on most of the CSG projects in Queensland. So we've got a very good handle of that. The next stage is the client requires some basic performance data. What sort of reagent, how much energy, what sort of products can I produce? That's like a scouting level worth of type of valuation. We've performed that on multiple projects already. The next stage is the client requests some sort of a scoping study or a pre-feasibility type study. Can we get some techno-economics now? So we get the process works so far. Can you give us some data on how much energy this is going to use, and how much space, etc. So we've gone through that stage with a number of projects, and we have a few projects in the works regarding that. From that point, there's a couple of stages. There's either perform a full feasibility study, but there's a bit of a fork in the road from once you understand the technology works and the economics work. There's a bit of a fork in the road. One pathway is the client says, this is very interesting, we want to be able to deliver this, so then they can pay us to evaluate that pathway. Or the other option is the client satisfies themselves that this is a solution, but they're not a natural owner of one of these plants because they're an oil and gas company. So at that point, they nominate their preferred project delivery model. And to date, as you would recall from the master plan we released early this year, we specifically released a upstream toll treatment strategy because we understood, we recognized that this is not core business for the client. So they don't necessarily have the expertise to even evaluate what that, the technical details are. From their perspective, they want to be confident that it's going to work. These people, we're not going to damage their operations. We're a reputable, reliable operator. But ultimately, it comes down to a commercial and risk and opportunity type model. And at this stage, they're the sorts of proposals we're evaluating. And the only reason I make that distinction, the threshold the client holds us to is very different. If they're going to pay us $20 million or $30 or $50 million, then that will take a long period of time in terms of them getting comfortable with first of a kind type technology. And recognizing that, we identified it's easy to get that sell if we're the ones owning the plant, rather than spend 2 years convincing them that this is going to do all the things it's going to do. These plants are not terribly expensive. So from the value we create, we just decided that was a superior business model. I mean, quite frankly, if we just take those numbers we released earlier this year, sort of around middle of the year, I think we nominated a $10 or $15 million capex. And if it's going to be generating you $10 or $15 million in revenue, and you've got sort of a 1 or 2 year sort of payback, is that the sort of project you want to spend a whole lot of time convincing the client to pay you, and for you to make a 10 or 15% EPC margin and make a one-off $2 or $3 million? These projects are too complicated to be generating that sort of margin. I want to be generating a $5, $6, $8 million margin for the life of that project. So that's more a reflection of our commercial model as opposed to the appetite the client has to adopting the technology, because that's not something we see as a particular challenge specifically.
Yeah. I get it. The toll model makes it even more palatable to the client. They don't take an upfront risk. You don't have to convince them. They pay as you go. So that leads back to the question, what's happening in 2024? Are we going to see the first plant being built? And not built, but also put in place?
Yeah, I mean, that's what we're working towards. So that process I just outlined around all the things that have to happen, we have a number of projects that are a fair way down that track. And some of the next stage of a couple of those projects, we need to be able to do a larger scale pilot. So we may have done some smaller scale work, but we've really got to scale that work up. And that's why we announced recently we're establishing a Centre of Brine Technologies where we have larger scale equipment where we can really pilot these flow sheets. And without sort of going into all the details, but the previous piloting work we announced, of course, Sven, was predominantly for the downstream work. And whilst we've done piloting on the upstream, we wouldn't have announced unless we did, extensive amount of piloting. But that was at, sort of a bench scale. It wasn't at a, significant scale. And that's work that we've already procured long lead items. We're setting up a facility. So putting ourselves in a position where we can go through that process, where we can, rapidly pilot, do some techno-economics, enter into commercial arrangements, and, all going to plan, reach a commercial agreement to deliver a solution for a client, during 2024. So that's certainly what we're working towards. Yes.
So my understanding is your engineers are already, along with Wally, designing the containerized solution, I would say, so that when the client gives green light, you're able to build it in a short period of time. And how short will that time be? Does it take half a year to build one of those, or what's the expected?
Yeah, I mean that, at a very high level, that sort of timeline. Obviously, some sites will be more complex. Some projects would be, larger, smaller, more remote. Yeah. There's a range of variables for that sort of time frame. That's right. So a lot of that large-scale engineering work, some of it is already underway, and some of it we have scheduled for the first half of next year. Yes.
Yeah. So now we've touched a lot on business development, technology implementation, and all of this. Ultimately, Parkway is a listed company and is dependent on, let's say, trigger points. What is going to be the driver for revaluation of the company? I understand, and we've been discussing that at another occasion, that a lot of these water companies have been under pressure. In relative terms, Parkway has held up really well, but ultimately that's not what we or what investors would like to see, and you, including yourself, of course. We want that hockey stick to occur. So maybe you can talk about the company and the listed company a little bit more in that regard.
Yeah, no, for sure, Sven, for sure. No, you're right. I mean, it is a challenging time for small companies. And I think I'd probably broaden your definition, Sven, whilst, I think we recently at the AGM, I made reference to a number of peer group companies only because I thought that was most relevant. But I don't think it's unique to the water sector. I mean, there's many junior companies. I think the investment bankers would tell us it's, sort of the more long duration stocks, those stocks as the, sort of bond yields have increased. Obviously, the appetite for risk assets or long duration assets has, completely sort of disappeared. So it has made it a more challenging operating period. And I guess the way we're dealing with that internally, what we're not recognizing, but what we're trying to position. Well, first of all, we set up this conventional water treatment part of our business, realizing that money's not always going to be easy to come by. So that was sort of a counter-cyclical investment, and it didn't look particularly smart at the time, but I think it certainly looks smarter now because we've already incurred those investments. It generates cash, and as well as providing us with capabilities. And separately, I think also some of these project delivery capabilities I've recently emphasized as well, Sven, sort of highlight the company's view around ultimately as a technology company, you have to be able to deliver. And I think that's a challenge that many of these, you have to have this strategy of how you're going to go to market, how you're going to monetize this. And I guess the focus that we're recently putting forward around fabrication capacity, project delivery capacity, operating capacity, these all point to sort of milestones around taking technology out of the development phase and getting it into implementation and therefore revenue generation. In this sort of forum, I can't go into too many of those details, but I think as more of those plans sort of in coming weeks and months become clearer, I'm quite confident that'll give the market some confidence around our ability to actually execute our plans, because I think until the market can see, and this isn't unique to Parkway incidentally, there's a number of sort of technology companies follow and I've sort of been involved with, until you get to the point where the market can see that you have the capacity to not just develop, but be able to execute, and you've got some visibility on timelines, and an analyst somewhere or somebody at home can crunch those numbers, particularly in the current environment where it's a risk off, unless it's something that's immediately visible, the assumption is you're not going to get there, the market discounts your prospects. And I think we, together with many companies at the moment, I think are in that basket. Whilst it is a risk off, we can't sort of change the market, but what we can do is ensure that we are executing, we bring forward our visibility on project execution, revenue generation, operating margins, free cash flow generation. And once we get more visibility, invariably I'm sure the market will turn, and at that point I'm sure we'll be revalued. But from where we are at the moment, sort of a $25 million market cap, at September 30 we had $5 million in the bank, we're generating $5 million in revenue, we have a number of advanced technologies, a number of great clients and partners. I think if we sat around looking at the share price all day long, I think we'd get all a little bit depressed. But from our perspective, we have a purpose, we've got a mission, we've got a strategy, and what we've got to do is just keep executing step by step. And I think during some of these downturns, actually, I forget who it was that, you've got to stay in the game long enough to get lucky sometimes. And we're certainly funded to deliver a number of, significant milestones. So challenging, but not defeatist would be the way I'd describe it, Sven.
Well, thanks for that summary. I think that really wraps it up very nicely. Bahay, we've been taking quite a long time already. I suggest we reconvene and at the next, let's say, occasion, and when there's newsworthy stuff to be discussed. Thanks for taking the time, Bahay, and we'll certainly come back and have another discussion. Thank you.